For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by LiveChamp. Today, we are very excited to be doing this webinar topics that is titled The 1, 2, 3s of Stock Trading. Now, stock trading doesn't have to be very complicated. In fact, it can be simplified. Simple strategy oftentimes can yield very powerful results. All right. So today we are going to look at how do we trade stocks using 1, 2, and 3 patterns. Okay. So my name is Shen Chu. I'm the moderator for this webinar. So disclaimer, whatever we're going to share on this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. So allow me to briefly introduce our speaker today, and he is none other than Tuan Haji Zainal Arifin. So Tuan Haji Zainal is a certified financial analyst, is also a certified financial technician. Okay, he's a full member of the International Federation of Technical Analysts, IFTA. He is also a full member of the United Kingdom Society of Technical Analysts, UKSTA. He is also a full member of the Malaysian Association of Technical Analysts, MATA. So he has a lot of credential and qualification up his belt, right? So he is also a senior vice president of Inter-Pacific Securities, Berhad. Aside from that, he also holds the Pengerusi Koperasi Remaja Bumiputra Berhad, mantan timbalan president Persatuan Remaja Bumiputra, and also he is a former principal consultant of MSTA program, okay, which is a program that satisfies people to be a MSTA. All right. If you join MSTA program, you can also become a CFTE, if I'm not mistaken. Okay. So, all right. So without further ado, let me invite Mr. Haji Zainal to come to this webinar to introduce how do we trade stocks using 1, 2, 3 patterns. Okay. Over to you, Tuan.
Okay. Good evening to all of you. Yes, thank you very much, Shane. Yes, thank you very much to LiveChamp that organized this webinar. Also, thank you very much for Bursa Malaysia that sponsor for this webinar. And also, last but not least, thank you very much to all of the participants today. And congratulations. I'm going to share to you, all of you today, something that is very simple that you can use, but it is a very powerful technique or trading technique that you can use, and hope that you use it correctly, you will make money consistently. Okay, as you said, Shane, just now, how are you, Shane?
Yeah, I'm good. And you?
Good. Yes, good. So still not too late to wish all our friends, all our Muslim friends for Hari Raya, Selamat Hari Raya, Aidil Fitri, Min Aidin wal Faizin, and also, but we still have everything about a few more days, for Hari Raya. Today I just come back from open house. Tomorrow I have another 2 or 3 more open house. I don't know how we have time to go inside. And for the past couple of days or past couple of weeks, usually the Saturday, jam packed all over KL. So I don't know whether I can attend all of these open house and all that. Okay, so we go to this topic that is 1, 2, 3 pattern, and so the first thing is that Assalamualaikum warahmatullahi wabarakatuh, and very good evening to all of you. Bismillahirrahmanirrahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. As all of you know that the market now is just a bit slow. Today's volume only about less than 3 billion. You see, but there are still a lot of opportunity in the market, especially for the bottom fishing. So it is a good time for all of you to learn. To learn how the new technique or this kind of technique, very simple technique, so that you will know when the market start to reverse. There's nothing wrong with the market actually. The only thing is that we have the external factors and also some of the internal factors. For example, like the factors in internal factors, which, for example, like the politics and all that. So and in the other factors also because basically because of the economy and also a problem of the not only that happen in Malaysia, also happen all over the world. And also you can see that the US market also, even though now is slightly up, but still not what we call not bullish yet lah. Okay, so we go to today's topic. Okay, let's say I share my screen first. All right. Okay. Okay, now you can see my screen. Okay.
Yes, perfect. Can see your screen.
Okay. The 1, 2, 3 of the stock trading. Okay. Okay, this is okay. All right. Okay. So this is today's agenda. Okay, the today's agenda is that our objective is the introduction and the pattern, the case study, and plan of action. Okay, so you see, before that we embark or we trade in the shares, you see, trade in shares on the stock market, you see, we must have the what we call planning or objective, what we want to achieve. Okay, you must have this. Okay? Otherwise, that you do, if you don't have this objective, which means that you will just make money and then you lose money, you just make money, lose money. So in the end, you didn't just maybe you can make money, but then it's just a small money because there's no objective. But once you have an objective, you can see clearly, or you can create the path, or you know you create the jalan of it, and then you do what you're supposed to do, and then you can achieve what is your goal. Okay, so let's say, for example, this is very simple hypothetical. Let's say you want to be a millionaire. Can you become a millionaire in the stock market? Yes, the answer is yes. The answer is yes. There's a lot of people also become a millionaire in the stock market. In the duration of 7 years, in the 7 years, let's say for example, you take a longer period, like 7 years. Can you become a millionaire in 7 years? Yes, the answer is yes. Let's say now you have a capital of 100,000. How? The next question is how. Let's say you have a capital of 100,000. Okay, rule of 72, which means that your money is a double. Double. Your target return is only 3% per month. And then year 2 it becomes 200,000, year 4 400,000, year 6 300,000, and year 7 your investment from 100,000 will become 1.2 million. Okay, how is it? It is only by consistently making only 3% per month. Okay, 3% per month. If 3% per month, is it difficult? If you are a seasoned investor, I don't think it is difficult. It is quite easy to make a 3% per month. See, actually, 3% per month is not difficult to achieve. The only problem is that to achieve, or problem is that to make it consistently, then it is a bit tough. But then just for the 3%, I think one day you can achieve, some of the days you can achieve 3%. But of course, not this kind of market. This kind of market is a bit tough. Okay, next one. Okay. So today, the learning objective today is that you are capable of making a prediction or forecasting using a technical analysis method in choosing stocks. I know some of you are very well versed or very good in technical analysis. I am a certified technical analyst, and I believe also some of you didn't really know much about the technical analysis, but then it's okay. Why? Because this is very simple technique. It's very simple. It's just visual. You can visualize it, and you can see, and then from there you can make a decision. Okay. The main purpose, if this the technical analysis, is that for us to make a decision, help us to make a decision to buy or to sell. Later, I'll share with all of you how, or a simple technique that we are using a technical analysis in buying and selling stocks. I'm very sure all of you must have your own system, whether you are using a fundamental or maybe you're using just guessing or using a hope analysis, whatever. But today, I'm going to share with you of using a technical analysis. So what is the learning outcome today? The learning outcome today is that at the end of the briefing, the participant will be capable of using the method easily with effectiveness in choosing stock for successful trade and also consistent. Okay. the first thing for the technical analysis is that a method, or what is technical analysis? Basically, it's a method to decide whether the stock or the whole market are worth buying or selling. That is the main purpose. Okay. And what do we use? That we use only price action and volume. That's all. So what's most important? The most important is the price action. The volume is a secondary that will help us, you see, to determine whether the price action is genuine or not. So the first or the most important is the price action. We don't look at the fundamental news. We don't look at any other news, because we believe, you see, as a technical analyst, we believe that the price already incorporated all the news that is available. All the news that is known or that is available is already incorporated in the market. Whether it is insider news or whether it's the news that is available in the public, will all be incorporated in the price. So therefore, the most important is the price actions. How is possible? It's quite possible. Why? Because let's say, for example, somebody knows something about the company. So what do? They will buy or they sell the stock. So when they buy and they sell the stock, they influence the price. So that is why, instead of we are searching for the news and for that, and or for what is the insider trade or anything, you see, insider trade, which means that the news that is exclusive or something that is known to certain people only, not necessarily insider trading. For example, like people who are very well versed with the certain industry, when they look at it, they know already there's a demand for it. For example, in 2020, pre-COVID, you see, the people who know about the glove, they already realize that the glove at that particular time was very good. Why? Because the glove will increase in demand. So that's why a lot of people, so they buy a glove, and you can see that the glove price or the glove company price shoot up. Yeah? Okay. So basically, we are only using the price action. Okay. So next one, in order for you to be successful in the stock market, it is very, very important is the money management. Is it? Money management, because that is your lifeline. Is it? Your lifeline is in the trading is the money. Is it? If let's say you want to trade, I want to trade, but then I lost all my capital, I cannot trade anymore, even though I'm good. So how to protect our capital is by money management. Money management that include portfolio management, your betting size. Betting size means that how much that you are buy every time that you buy, how much you're buying. Usually that you put a fixed amount in terms of money. Let's say, for example, that you buy every time that you buy is only 10,000 ringgit, for example, or 5,000 or 30,000, depending on how much capital you have. Okay, and also you must have a stop loss. We have the knowledge, we do the forecast, you see, but then there is always elements of something that's not going to happen or is not going to happen of what that your projection. See, this is, for example, because this is very simple. This is so same thing in life also. For example, like our daily life. For example, suddenly you can see, oh, today I believe it is going to, it's sunshine, but then towards afternoon that is rain. You see, so this is something that we cannot control, but we can control our action. So that is why we must have a stop loss. The stop loss is our action. Market up and down, that we cannot control. Market up and down, the market goes up, market goes down, we cannot control, but then we can control. What is it? We can control our action. That is, we buy or we sell or we stop loss or we add a position and all that. Okay. And also, every time that when you trade, that you have to calculate your risk and reward ratio. So whether it is worth it or not worth it. So these are all the components, these are the components of the money management that for you to make money, for you consistently in the stock market. Whether you like it or you don't like it, you have to do this if you want to make money in the stock market. Unless you just a day trader, okay, or you are a trader, you want just trade for fun, and that's different. So which means it's up to you, because some of the clients, they are just trade for fun, which means that no, it's not that I want to make a lot of money. The only thing is that I want just what we call you have some excitement in the market. You see, if you lose money or make money, it didn't make any difference to them. That's a different story. But then I believe all of you here is in this seminar, in this webinar, that you want to make money. Okay. Second, the fund is money. Money. Second is a price forecasting. When you talk about price forecasting, what does it mean of price forecasting? Price forecasting means that what is the future price? It can be up, it can be down, it can be sideways. So in other words, we call it trend. Okay. The third one is that the timing. If you are a trader, especially if you are a short-term trader, whether intraday or a swing trade, the most important is timing. Why? Because that is where that you might be right, you see, but your timing is wrong, you see. So I think you also will lose money. Okay. So that is why, what is the best, or what I say like that is, what is the best technique for us to do or using timing to trade in the stock market? The best tool is the technical analysis. So because we study the price action. Okay. And then the fourth one is also very important. That is trading psychology. Okay. So which means that how to trade, or how to control your emotion in trading. What you have to do is that you have to plan your trade, your buying price, your selling price, your time frame, and also your stop loss. Only then you can eliminate, or you can at least you are not being controlled or influenced by your emotion. So these are the four things, or the four items that is very important that we must follow in order for you to make money in the stock market. Okay. When you talk about a price forecasting, you see, so basically is that yes, it is trend, you see, but then what is actually the most important is the support and resistance. If you learn, or if you practice, or if you are master the support and resistance, that is the keyword, or that is the main thing that you need to know, and that is enough for you to make money by using support and resistance only. Okay. Next one. Okay. This is an example. So this is an example. Let's say you have a total investment fund of 100,000. Okay. So you put 10,000 each as your betting size. Okay. As your betting size, you see, and you split it invest maximum of 50k. Why only 50,000? I have 100,000 because as a contingency that you never know. You never know market is going down or it's going up. So in the stock market, the keyword, or what you have to do is basically is that we like nibble. So which means that we make a little bit, we get out, we make a little bit and we get out, make a little bit and we get out. So that if something goes wrong, you still have the capital. Remember, as I said just now, whereby that the most important in the trading game is the capital. Because once you finish your capital, there's no more. This game over. You see? And you have to set your stop loss between 2 to 5%. There is a lot of ways to set stop loss. There's a lot of ways, because in fact the previous last week I give a talk about the selling. You can search the video in the YouTube and you watch that video, how to sell. There's a lot of ways that I've explained last week. But today, as a rule of thumb, you can just put a 2 to 5% of the fund for the stop loss. And also you hold a maximum only 5 stocks at one time. So this is talking about trading, not investment. It's about trading. So why only 5 stocks? The main reason is a 5 stock, because if you see, for example, you look at your screen, for example, one look at it, you can see about 5 lines. Same thing also in the stock market, or when you monitor, you have 5 stocks. Is easier for you to monitor. More than that, it's become it still can, but then it's a bit difficult. So usually we recommend that you only look at the 5 stocks. Okay. And then split your money. Not necessarily 70-30. It can be 90-10. It can be 10-80-20. But usually, if you have 100,000, usually we advise about 70 and 30. Between investment and speculation stocks. What does it mean speculative stock? It means speculative stock, which means that the stock that is active or the what that is in trend now. That is a very called speculative stock. But then you go buy the stock or invest in the stock that is have a good dividend, or what we say is a very good stocks. You see, this is the one that make money, big money, but it take a longer time. But the 30% that is when you trade, this is the money that is for you to keep active and also assignment, basically assignment. And you can make money, probably you can make money if you know how to make money. But today, I'll share with you how is it. Okay. Next one. Okay. So this is what research has done, you see. So a lot of people, if you look at the seminars or webinars, most of the webinars, they teach you or they tell you how to buy or sometimes how to sell. But it's very seldom that you can see the webinar talking about the psychology or the money management. But that is the most important. The most important in trading basically are the psychology and the money management. So from now onward, my advice is that to all of you, to all my friends here, that look at the psychology and learn about the money management. Hold it very tight, you see, and hold it very disciplined. And I believe you can see the difference between 3 to 6 months. You can see the difference when you really practice the money management. Okay. Now we go to the topic that is a pattern 1, 2, 3. There is a road to successful stock trading. All right, now this pattern 1, 2, 3 basically is a very old technique. It was, I think, it was mentioned in the 1870s, but it is still relevant till today, and it is still very good. The successful rate, I think, go about 70% successful rate. So when the successful rate is 70%, we know that there are 30% of the unsuccessful. That is why you must have a stop loss. Okay. So it's very simple visual technique. You don't need to be you don't need to be an expert in the technical analysis to learn or to use this 1, 2, 3 pattern, because it's just a visual technique and it's very simple. I'll show you later. And also you can make a lot of profit by that. Okay. Accuracy about 70%, and it's very simple. Entry rule, that is break the previous high, and 0.3 should be higher than 0.1. I'll explain to you later on what the psychology about the technique. Okay. This is what we call a 1, 2, 3 pattern. Okay. There are a few rules for you to follow. One is that the number 3 must be higher than the number 1. So which means that it is when the price goes up, okay, and the price drop. When the price drop, this drop is not up to this level. So the next question is that why it happened like this? Okay. This is just a psychology. When the price start to move, and reach the level, there is a selling pressure. Let's say, for example, the price moved from 1 ringgit. It goes to 120, for example. This is 20% return, 30% return. So there we create a selling pressure. And what when it goes down, it comes down, there are two types of people. One is that who failed to buy at 1 ringgit, who missed the boat. Second is that the person who bought, but then he didn't manage to sell at 120. When the price goes down, the one who missed the boat at 1 ringgit, the one who missed the boat at 1 ringgit just now, will buy, or we are willing to pay higher price. That is a correct word. Willing to pay higher price. That is why the price didn't drop back to the 100%, or it didn't drop to 100% retracement. Of course, if you learn more advanced, there is a calculation. How many percent of this down, whether it's 23% or it is 50% or what. Usually it's about 50%, from 23% to about 70%. So this is usually the range. Okay, so there is a drop from 0.2 to 0.3. Okay. The next one is that where is our entry point? our entry point is that when the tree or the wave tree, we call it wave here, break the 2 or break the previous high. Okay, now remember just now I told you about the support and resistance. Okay, so basically when we talk about, we say what is uptrend, for example. What is uptrend? Okay, uptrend actually is the higher support. That is what we call uptrend. Okay. The definition of uptrend is a higher support, or we call it a higher low, or higher low, or higher low, or higher low, and or higher peak. Higher low and higher peak. Okay. So that is basically the uptrend. Why? Because the buyer are willing to pay higher. So that is what we call is uptrend. And the resistance is that, you see, previous high. Previous, which means that once it break the previous high, it shows that there is no more supply or no more supply on that price or previous high. So which means that it will go to a new territory and the price will move up. So that is the theory of the 1, 2, 3 pattern. And it's very old theory. Yes, it's old theory. It says Dow theory, but it's still relevant till today. I will show it to you later. The sample, you look at a lot of chart, and most of chart, not only in Malaysia, it's all over the world, and also not only in the stock market or in the equity, also in some other instruments too. And also not only the short term, and also for the long term, because this is human behavior. So point 1, I repeat again, occur when the price reach high and then bounce off in the opposite direction. So which means that it goes up and down. As a result of rebound, a price form a new low, then the price retrace and form a new high below the previous one. Then the price goes down, which is a confirmation of a trend reversal. Now it need to wait for the point to break out to be able to short. Okay, let's say I draw like this. The price start to move. Okay, this is price start to move. 1, see, and and then it start to come down. See, this is 2, and start to move up again. All right. Now, let's say now the price move up here. Can you buy now? Yes, but it is not a confirmation. Why? Because it might go down again. It's a possibility of going down. You see, it's possible of going down. So if it goes up further and it break this level, see, break this level, break out this previous peak. So that is a confirmation that show that the price or the trend is up trend. Okay. So that is how you determine the uptrend. Okay. All right. So we go to the next slide. Okay. Okay. Sometimes there is always a question being asked. This question being asked is that how do we determine that whether it is the confirmation or the outwards thrust is genuine, or is it just a false breakout? Okay, you don't worry about that, because whether it's false breakout or genuine, that is not a problem. I don't say it's not a problem. What we can say is that we have another mechanism, or what we call is a stop loss. You see, a stop loss. So which means that if the price drop below the previous high, so which means that it is a false breakout. So the stop loss mechanism will enter in the market, and then we do the stop loss. So don't worry about whether is it a false breakout or is it a real breakout or what. No, it is. So the most important, as I said earlier, that is we cannot control the market, but we can control our action. So one of the way that to determine whether it is a genuine breakout or not is the volume. The volume. So which means that usually when the breakout happen at the point here, enter as this that the volume is higher. If you look closely, most of the time, not necessary that it always happen, but usually it's happen this way. From point 1 to point 2, volume increase, and from point 3 to point 2 to point 3, the volume decrease. They always decrease in volume, and the volume start to pick up again from point 3 to the breakout point, and at the breakout point, that is always a big volume. So that is where confirmation that shows that it is a genuine breakout. Okay, all right. So the entry rule is very simple. Entry rule is very simple. It is breakout previous peak, and the point 3 must be higher than point 1, which means they're talking about the higher low. So point 3. So it's talking about the higher low. Okay. Now the next one. Okay. Now we know the rules of buying. So what about the rule of selling? Okay, the rule of selling. There are a few ways of rule of selling. You see, of course, one is that you can use it 2 consecutive days or close lower, or stop loss, take profit. Usually there is the difference between take profit and stop loss. If the stop loss, the price hit lower than the point 2. In other words, is that if the price drop to this level, let's say in a breakout, and then it drop again and break this point 2, so that is the first signal, or usually that is where that we put our stop loss. Okay, then the next one. Okay, this is for example. Okay, 1, 2, 3. This is a breakout. This is where is that you buy, and usually the volume is big here. There's a big volume here. The volume here is low volume, and this is a big volume, and it's breakout. If in case the price drop to the level or below this peak of 2, and then the stop loss will trigger. So usually we put the stop loss at the slightly below the level of 2. For example, let's say this 2 is 3 ringgit, for example. So instead of we put 3 ringgit as a stop loss, we put perhaps 290 or 280 as a stop loss. Okay, just now here is in terms of a line chart. In here, if you look at the candlestick or candle chart, so this is how this look like. It goes up and then it's come down, and then it goes up. There's a breakout here. It's a breakout here, and then that is where that we buy, or you buy when it start to create a new high, or higher than this point 2. And this always happen in the market. Next one. Okay, next one is that selling. Okay, selling is the opposite, which means that instead of it come down and it goes up, and it is break the point 2 and it goes down, and usually this on the enter or break also there is a big volume. Yeah, it's a big volume. Okay, so usually it's a big volume also. Okay. And usually also the going down, or this down is much faster than the buying. Okay.
Tuan, are you showing the your chart, is it? Or you're showing the slide?
I'm showing the slide.
Oh, slide, is it? Okay.
Yeah, no, yet. Later you show the chart. I'm giving them the theory first. Okay, so this is for example, actually this is the actual chart. It's a chart. I just delete all the candles. You see? Also, this is the actual one. So how you get moved up and come down, this one. So this is a longer period, a longer one. Okay. If you are short, if you are short, or if you are selling, it's like this, which means that it come down 2 and 3, and then there's a breakout, and then it's low. So this is also a stop. Oh, sorry, what we call a support and resistance. See, when it come down, number 2 or point 2 become the resistance, or become the support. You see, when it goes up, it failed to match the previous high. So which means that the number 3 is a lower peak, or lower top, or lower high. So which means that it shows that the trend, or the pressure for the market to move up is getting weaker. Okay. And we use a 0.2 as a resistance. Once it's break resistance, which means that the market is going down. So this is how the example. For example, you can see that market is going down, and then it start to move up. See, but then it failed to reach the starting point of the level 1 or the 0.1, and after that it break this level or break the previous low, which means that is a previous low here. So the price all the way going down. So it is very important there is a support and resistance. Just learn the support and resistance, and you will know, or you can master this technique. Next one. All right. Okay. This is another example. Usually, but this is usually is very powerful. When the market come down and then it's reverse. Okay, reverse 1, it is a 0.1, a starting point, a 0.2 and 0.3, which is higher than this, and then it goes up, a breakout, and when it come down, it didn't break the 0.2, and it goes up again, and it break out this level, which means it break out the previous. No, this one, annotate. This no. Okay, it break out the previous level. For example, in here there is this level. Sorry. Okay, this level. So you can see that this is very powerful. Moving up. Okay. Okay. This is the actual chart. It's the same, which means that it goes up 1, 2. This also have a 1, 2, 3 pattern here. There's a 1. Here is 2. Here is 2. And this is a breakout, and then it's a pullback, and then it goes up again. Okay, this is another example. It's another variation. It's come up, it come down, and also this is it goes lower, and it goes up 1, 2, and 3, and also it just touch only, and it shoot up. So that is why just now I mentioned that put your stop loss lower than the 0.2. Don't put at the 0.2. Put it lower. Okay, this is a retracement. The retracement, what level it come down, what level it usually goes. Usually it's like this. You see that the peak of the peak at number 1, and then it dropped to number 2. So when it reaches number 3, usually retracement is either 23.6 or 38.2, 50%, or 61.8. Usually it goes to 7.8. One it start to drop, it go back to the break the level 2 or this trough of 2, and then that is where that we have to sell, or but we say it is where is that the trend is confirmed, the trend is going down. This is an example of it in the chart form. This is also another variation. 1 to 3 lower, 1, 1, 2, 3 breakout, and then after that, this is you can see this is what we call a false breakout. But it make another one. It goes up 1, 2, and 3, and you can see that is a breakout. That's where you have to sell. Okay, this ideal 1, 2, 3 pattern. It is a fail bull. Okay. You see, you need to master this technique in order for you to use it effectively. Of course, you can use it because it's a very simple technique. You can use it, but then in order for you to make it very effective, you have to really master and to look at the pattern of the movement and the confirmation, and then you can make it consistently. But it's very easy to learn. And what you need to do is just to practice. Okay. For example, like here, this is ideal bull, this ideal bear, and this also if we call it a fail bear, a fail bull or fail bear. What does it mean? It means that you see that it's the price up 1, instead of going up, it failed to goes up and it's come down. This is a reversal pattern. 1, 2, 3. So this is buy or breakout of 2. Okay, next one. Give me the. All right. So this is another variation, but still the same. Is 1, 2, 3, but this is slightly advanced. Slightly advanced means what? Which means that the selling, that it gives you the selling much earlier, which it break the support line or the trend line. So actually the selling is here, the confirmation sell is here. So this is where the confirmation. And the target price. So we can use this also as a target price. How to determine the target price? The distance is set between 1 and 2, and the breakout here it is up to 4. Usually the distance or the length from 1 to 2 and from this breakout to 4 is almost the same distance. So the trading pattern, or what we call this trading using this 1 to 3 pattern. Okay. Just remember this. There must be at least minimum a 3 candle between 0.1 and 0.2 and 0.2 and 0.3. So this is we're talking about slightly advanced, which means that if you're using the candle, the larger the distance between 1, 2, and 3, the larger the possibility of the getting profit. Like most price action, pattern 1 to 3 must have a nearby confirmation pattern. This may be a significant price level, a Fibo level, or pivot level. So this is how we determine where to make it more objectively. So we use the Fibo or the pivot. Another important condition is the point 1 has a long axis towards the direction of the flow, as if the wick is moving out of the support horizon level. If the pin rod full, good. If the pin rod is not visible, chance for you to achieve your minimum profit are lower. So it depends on the size of the length of the candle. Even a perfectly formed pattern does not guarantee you will get a lucrative profit. Thus, your trading risk must not exceed 1 to 2% from your deposit. So this is what we call a money management. Yes, we have all the knowledge. We study everything, but still we have to be careful. So we must have the trading management or money management. If pattern from 0.3 and your take profit is not activated, or is your take profit is active but the price continue move sideways, you have to close all the order that are not active. Or this is how the trading technique. So which means that if it fail to move up further, so you have to do the stop loss or you have to take profit. And now we go slightly further up, which we're talking about how to do the combination or how to make it more effective. Okay, there are a few ways for us to do it. One is that you can use a moving average, or you can use RSI, or you can use MACD. You can use all three, or you can use only one. It's up to you. This is your choice. Okay, this is, for example, using the moving average. Okay, why that we need to use moving average? So it is to make it to determine whether the trend is uptrend or is it sideways or it is a downtrend. So it is very effective or is very powerful when the market is uptrend and you can see it is 1 to 3 pattern. So for example, okay, you can see that the price is dropped and then it's 1 and it is 2 and it's breakout, it's a breakout, and you can see that also the moving average also is pointing up. So that is where that is this pattern, or what you can say that this breakout is a genuine breakout. And if you notice this breakout, there's a big volume there. There is also a genuine breakout, and it will show, or we can say that it is a genuine breakout and it is a very high potential that the price will continue uptrend. And as long as it is above the moving average, in this case, I think I'm using how many days moving average? So 1 week, 91 cents. I'm not very sure if it's moving average, but usually we use 20 days moving average or 20 weeks moving average. As long as the price above the moving average, so we enter on every 1 to 3 pattern or every breakout. So for example, like here, there's an entry here. It come down, it's breakout again, another entry. Come down, breakout again, another entry. So as long as it's above the moving average, so we keep on goes in or re-entry. That is how to use the moving average. Okay, next one, RSI. How to use RSI? Okay, we use the RSI. We use the mid RSI or mid-level RSI. RSI is from 0 to 100. So if you see the pattern or 1 to 3 pattern when the RSI above 50, so it is a more potential of you to make money. So just wait, for example, like in here, you see it shows that it's below 50, and this is above 50. When there is a breakout, that is where the potential the price will be. And it's as long as the RSI above 50 and there is no divergence in RSI, so you just keep on re-entry, re-entry, and re-entry. So it's very simple. The MACD, okay, how to use MACD, how you combine the MACD with the 1 to 3 pattern. Okay. So the MACD is that when the MACD, there are two ways or two techniques. The first technique is that when the MACD is in the yellow line, is the yellow line MACD line, cross the average, which means that yellow line, they cross this green line. That is the first signal. The first signal, so which means that as long as this yellow line above this green line, so you can say, or we can say, this is where that you can enter and also re-entry whenever there is a breakout or 1 to 3 pattern. Or also you can use is the MACD histogram. So whenever MACD histogram is a positive, so you can use that also as a entry, which means that you show that all the, okay, put it this way, the MACD, the moving average, or the RSI is to determine the trend. You use the 1 to 3 pattern to determine the entry point. So when you look at it, which means that, for example, in here, this MACD, whenever the MACD is positive, so we know that the market is in uptrend. And we use the 1 to 3 pattern for the signal or entry. So which means whenever there's a breakout, that's where we enter. There's a signal, and that's where we enter whenever there's a breakout. Okay. Let's say now we go for the case study. Okay, this is the previous, I think about quite some time ago. This is a 1 to 3 pattern from the lowest 1, 2, 3, and the breakout. You can see there's a 3. So that is how the breakout. And this breakout, as you can see, the breakout here, there is not much volume. I think because this is at low price. There is another breakout here. There's another breakout here. You can see there's a higher volume. And there's a higher volume here. You can see the bigger volume here. There's another breakout here. Another breakout here. And then there is a small breakout here. There's also another breakout here. Down also you can see actually it's a pattern here. You can see this is 1, 2, 3. 1, 2, and 3. So it break this level because after that the price drop further. Let me clear the drawings first. Alright, okay, next one. Okay. This is the same thing also, which means that is 1, 2, 3, 3, and then it goes up. So there's a breakout. See, usually it's not necessary that the number 3 is above number 1. The most important rules is that there is a breakout from the, or break the previous high. There is a level or number 2, or what we call is a previous peak, or there is a peak at the 2. There's a breakout. So that will determine whether the price or the trend is up or down. This is another example. This is another example of this is another example, a breakout. See, there's a breakout. Then after that, the price move up higher. Okay. So practice using paper trade. In order for you to view, you can use using paper trade. And after that, once you have mastered the technique, okay, and then you use the real trading. Okay, so what you have learned, 1 is a basic technique, number 2 is a technique. All right, let me show you a real example, or the, let's see, let me share the chart. Okay, let's say we go for the this is slightly easier. Okay, so I put it as weekly, and also I put it on the weekly so that it has become a smoother. So smoother, you can see clearly. All right, now in here, can you see the level 1 to 3 pattern Okay, there's a lot here. Okay, for example, like here, this is one. See, for example, like this. Oh, no. Okay, let's see this one, two, and then three. Okay, break out this level. So this is what we call 1, 2, 3 pattern. Any more? Any oh, no, sorry, let me clear all first. Okay, what else? Okay, let's say we look some of the stocks. What stock? Let's say TM, for example. Okay, this is a line chart. Okay, this is a candlestick chart. It's also the same thing. We can have here, this is a bit smaller. Let's see, a bit smaller. Okay, for example, this is you take the highest, the lowest. Okay, and then there is one more, and then there is okay, there is a breakout. Not very good. This is not very good, but still can. Let's see daily. Got any of daily? Let me see daily. Oh yes, daily is a lot. It's very clear. 1, 2, 3. This is a breakout here. In here also there's one. 2. This is a bit longer. It's a bit longer. 1, 2, 3. It's a bit longer. So, but you can see there's a lot of 1, 2, 3 pattern everywhere in the market. Almost every day that you can see all of this 1, 2, 3 pattern is everywhere. Okay, perhaps I open Shane. You come back to Shane. Maybe you can start the Q&A session. Let's see. Where is it? Okay. Okay, let's see, got any perhaps I can answer some questions. Okay. Okay, from a reference of the MA value for that. All right, let me find some. Okay, okay, let me see, let me brush through the what is. Okay, one question here: how to make a fake breakout? I think I did explain already. Okay, this use volume to break out. Yes, that's right. And then okay, which time frame is the most suitable? This is from Cik Faizal Mokhtar. He's asking a question. Which time frame is the most suitable for this? The 1 to 3 pattern you can use almost any time frame. Let's say, for example, in this case, if what is this TM, for example, okay, you put 30 minutes. Also, you can see a lot of 1, 2, 3 pattern. Of course, it's easier for you to see using the line chart, but you can use also the candlestick chart. You can see that there is a lot of 1, 2, 3 pattern here. There is 1, 2, and there's a breakout here. Let's see horizontal line. You can see there's a breakout here. No, there's a breakout here. Yes, there's a breakout here. And you can see there is 1, 2, 3 pattern here. 1, 2, and this is a breakout. There's a breakout here. There's a smaller version of 1.123. It's also the breakout. As you can see, there is also is a breakout here. Another breakout here. And also selling also the same thing. There is it goes down and then it break out. It's breakout. This is one. This is very small version. So that's why as mentioned earlier, there is a lot of version that you need to practice. But the basic is that it is a 1, 2, 3 pattern. Okay. Okay, let me answer some question. Okay, from Sharliza Muhammad Aris. Okay. can 1 to 3 technique happen in the sideways market? Yes, but it's good for in the trendy market. If it's sideways market, and then there is a lot of whipsaw. Not really, sorry, not really. Very unlikely. It can happen, but then it's very, what we call is very, a lot of you use some of the very whipsaw, the very small 1 to 3 pattern. So usually, is if the market is sideways, that we use a longer term. Which means, for example, like we can't see sideways, for example, in 30 minutes, so we use 1 day, or you can use 1 week. So that is so you can see clearly. For example, like in this case, this is like 30 minutes. If we make it 4 hours, for example, and then you can see more clearer. Or you want to see make it daily, so you can see there is much better direction. You can see that the price is all the way going down, and then for example, in this case, it is up. Okay, you can see this is already up, or market is rising, or it's uptrend. Also from there, that you can use this 1 to 3 pattern for the entry, where there is the entry point. Okay, next question is Aeon stock currently on the 1 to 3 technique, AEON? Let's see, AEON, is there any 1 to 3 there? For the uptrend, there's a lot 1 to 3. There's 1, 2, 3. There's a lot up 3, 1 to 3. Uptrend 1, 2, there's a breakout here. For example, this one, there is you can see there is no, this is okay. For example, like this, 1, and then this 2, and this is 3. Okay, and then it is 1, there is 2, but for downtrend, not yet. There is still not yet. Still above the support level. Okay, there is a support level here. Okay, still the support. Oh, below the support level already. Weekly, it's below support level. 1 possible. This is in the making, but then it's not complete. We have to wait for it to complete first, which means that if it drop again, let's say for example, is but it's a bit too big, you can go for the H4 and see. Yes, there's 1 to 3 pattern here. 1, 2, 3. There's a breakout here. Is a breakout point here. There is a breakout point, and this is the path. 1, 2, and this is 3. 1, 2, 3. Okay, yes, that is the Aeon. Okay, next question. Okay, okay, is entry is Aeon? So all right. Okay. Entry from you using daily, weekly. Okay, as I said, I mentioned earlier, Jane, you can use all. And then okay, is 1 to 3 pattern ini terpakai untuk saham yang mengalami kerugian dan spekulasi stok macam Sapura Energy. Okay, so basically 1 to 3 pattern you can use on any stock, okay, provided that give you a pattern. Okay, thank you, very good question. But you see, when we do what we call we do the 1 to 3 pattern, you see, it's not that we must look or we must search or we must hunt for the pattern. Is there any pattern or not? That's the most important. When there is pattern, only we take action. It's not that we look at it or we search for the or what we call we look at the pattern. Oh, this is a pattern. No. We wait for the pattern to happen. Only then we take action. So the question is that, is there any pattern? If there's no pattern, we don't trade. So when there's a pattern, only we trade. So that is how to use the 1 to 3 pattern. Okay. Joshua said, Harbor. This is not buy or sell. This is not buying or selling recommendation. It's just showing you whether there is a pattern or there's no pattern. That's all. Okay. So there is not yet. Oh, sorry. There is one. No, not yet. It's not yet. We can still going down. So this so what will happen is possible usually is this very small. Yes, there's one small one here, two here, there's a breakout here, this very small one. But if you're talking about weekly, not yet. Weekly, not yet. Yes, weekly, oh yes, only the number one still is still not complete yet. So usually what will happen, or we say this is a one, it goes down slightly, and then the breakout, only then we can say that there is a pattern. So for the time being, at the moment, this is only the downtrend. It's not a uptrend pattern yet. Okay. Let's see. Time frame. Okay, I already answered already. The time frame on the pattern, we can use it for any. We can use we can use, because usually that I personally use the 1 to 3 pattern for the short term or intraday trading. So we use the 1 to 3 pattern for intraday because it's very effective. It's very effective using it intraday. If you use intraday, it's very effective. Okay, let's see a TH plan. TH plan. Yes, there is 1 to 3 pattern, but it's going down. Okay, there is a 1, 2, and 3. Okay, so 1, 2, and 3. This is the breakdown. All right. Yes. Yeah. So that is how to use the 1, 2, 3 pattern. Okay.
Okay, looks like Tuan has finished answering all the questions on Q&A.
Yeah.
Maybe you want to look at the chat box. I think there are also a couple of questions here on the chat group.
Okay, there's a few questions here. Okay, let's see. Okay, time frame the answer. 0.3 should 0.3 higher volume than 0.1. Okay, this Mr. from FHQ should 0.3 have higher volume than 0.1 and 0.2. Not necessary. Not necessary. Not necessary. So usually the breakout will have a higher volume. Okay. Okay, Muhammad Yusuf, reference MA value. Okay, it's up to you what kind of MA value you can use. It depends on the time frame. If you are a short-term trader, perhaps you can use shorter MAs or shorter moving average. Maybe you can use 10, but I personally I use 20. So I use 20. So because it's not too long and not too short, so I use 20 to determine whether the price or whether the trend is up or down.
You use 20 on the daily chart, am I right?
Yes, 20 days on the daily chart.
If you do intraday scalping on 1, 2, 3 pattern,
okay. If you are using the intradays, let's say for example for scalping we use usually we use 5 and 3 on a minute chart, or we can use either minute chart or we use 30-minute chart. It depends on the certain if it's too active, very active, and then we use a smaller time frame, 5 minutes for example, 1 to 5 minutes. But if it's just a normal market, so we use usually is 30 minutes. So the main purpose is that to determine the direction of the market. So we use the moving average 3 and 5 and 10 for example to determine the direction, and we use the 1 2 3 pattern for the entry point, and for the reversal. Okay. Let's say for example like this Actually, any stock also is the same. It's not different. Okay, it's not different. Let's say this, we use this as a candle. Okay, make it bigger. Okay, let's see, 30 minutes. Okay, 30 minutes. So no. No. Okay. All right. This is where usually when we go for the short-term trade, this is what we're looking at. It's also is 1 to 3 pattern. You see, you look at this, is 1 to 3 pattern also. From here is one, see, and here is this is the number 2. This is 2 here. See, and we wait for the price to move up and to break this level. So in this case is here. Okay. This is 30 minutes. This 30 minutes. You see, 30 minutes. So we wait for the price to break this level, and that is where our entry point. So if for the intraday, you have to wait for the action. Once it happened, that is where it trigger. Usually we can use what we call a conditional order, also can, but usually I seldom use conditional order to buy. I only use conditional order to sell. But for the sometimes that we use the trigger to trigger us that the market is already break the point, and then we can look at it, or we can take action. But usually before this, step, usually that we look at the daily first, or daily and weekly. Usually we look at the weekly to determine whether the market is uptrend or a downtrend. So we have to decide. One is that we have to determine whether market is uptrend, one, and then second, we look at the lower time frame, and then we use the 1 to 3 to enter the market. Okay, let's see what is the question. Correction. Okay, Muhammad Fatihi, determine the false breakout. I think I already covered that. How to determine
volume.
Volume.
Yeah, which is use volume to determine false breakout.
Can also, but then usually we determine using the price action. With the price action to determine whether it's a false breakout or not. Usually we determine with the price the price action. And we use the price action then to determine whether it's a false breakout or not. Because for example, like let's say for example like this. Okay, like this. When the price drop, this is a breakout here. Okay, this breakout, you can see yellow here. Sorry, a green candle here. But then the next one, you see, for example, the next one you can see that is what we call, of course, we call candlestick. We call it
dark cloud cover.
Dark cloud cover. You see dark cloud cover. So which means that we know that this is a false breakout. And where that we want to put our stop loss, you see, this is where the stop loss will be here. This is our stop loss. Is there any 1 to 3 pattern here? Yes, there is 1 to 3 pattern here also, you see. So which means that you look at the price is drop 1, it is 2, and then it is 2, then drop is 3 here. No, sorry, that's one. Highest, and then it is goes to the lowest. This is the opening, and this is the lowest. So it is also a 1 to 3 pattern also, but usually we don't use this 1 to 3 pattern. There's 3 pattern in here, but it's still same, which means that what I'm trying to tell you here is that this breakout is a false breakout. So you should put your stop loss is lower than this. So which is why we put here, because that is the starting of the breakout. If I change it into line, you can see it much clearer. That is where the line just now here. This is where the base or the starting point here. That is the breakout here. It break above and it drop again, but it break the resistance, or break the support. You see? That's why I said earlier. I mentioned that is very important is that you learn or you study the support and the resistance. But that is where the technique or is a technical analysis basically based on this support and resistance.
Okay, understand.
Okay, any other question?
Yeah, I think Muhammad Lisan asked, can we use zigzag indicator for confirmation?
a zigzag indicator.
Yep.
Zigzag indicator, usually we use it in the, for the, if I'm not mistaken, I started use zigzag indicator, but usually we use it during the sideways market, you see, for the zigzag. Yeah. Also can, I'm not very sure which zigzag is referring to, but I seldom use zigzag because the main purpose for the 1 2 3 pattern is that it is a very simple technique and just visualize. You just visualize, you don't have to calculate, there's no calculation involved, there is no interpretation whatever. So it's very easy, just like moving average, just look at it whether it's up or down. So same thing also in the 1 2 3 pattern, because the main purpose is that it's visualized and very easy to use. Yeah, that is so you can just visual only, just very easy to use. That is the main purpose.
Okay. Could you look at Optimax? That's by Tenji.
Optimax.
Yep.
Optimax. 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 As I mentioned earlier, this is not a buy call or sell call, but we look at the pattern, whether it's is there any 1 2 3 pattern. Okay, that's it. It is daily. Okay, let's take candle. Okay, 1 2 3. All right, good. Okay, so we can have this. Let's see. This is lowest. This is 1. This is 2. So it will complete the 1 2 3 pattern when it break this. So the breakout will be this level. This is the breakout point. So it's not complete yet. The 1 2 3 pattern is not complete. It will only complete when it's breakout this line, this level.
Okay. Can we use this 1 2 3 method on option trading? So there's a question by Gun.
As long as it is continuous trading, you can use this 1 2 3 method. Either whether you can use in a commodity or forex, whatever it is also, or you can use as long as it's a continuous trading. Because it's very simple, it's just a visual, you can look at it, and also it's always happen almost everywhere, okay? And almost every day and almost every time it's always happen 1 2 3 1 2 3 1 2 3.
Okay. Now, Izzat would like to ask, do you have delay in trading view compared to Bursa?
It depends on what the trading view. If your paid version, it is real time. If it's a free version, it is a delay.
Okay.
You don't need the trading view. You just need the brokers. All the brokers give you the chart, and from there also you can use it. So it is quite simple. It's very simple. The first thing that you have to determine whether it is market is uptrend or downtrend. So you can use the moving average, you can use MACD, or you can use this RSI to determine whether the market is uptrend or the market is downtrend. And when the market is really uptrend, you only that you search or you look for 1 2 3 pattern for the entry. So that is actually is the easiest way for you to use the 1 2 3 pattern.
Okay. Could you look at Tongguan? Is there any 1 2 3 pattern? So there's a question by Rusdi.
Tiguan. No. How to
Tongguan. TGUAN. T.
Oh, Tongguan. T. Tiguan.
Yep. That's right.
Oh, okay. Yes, this is a 1 2 3 pattern. Let's see, we change it to line. Okay, you can see that. Yeah, so it is easier for you to see. 1 2 3 pattern. Yes, there is a 1 2 3 here, selling here. Okay. this 1 to 3 pattern here. Okay, 1, 2, and 3. There's a when it's break this level, so there is a the level of 1 to 3 pattern. Yes, they do have 1 to 3 pattern for the Tongguan Industries on the downtrend. But the uptrend, it not yet. It is only one leg, so you have must have at least a second leg, and it goes up. And it always depend on the what kind of stock. Not all stock give you a very good signal. Usually the stock that is independent, or that is it's not controlled by somebody, and then you can use this 1 to 3 pattern more effectively. But if it's or it is very small or very thin volume stock, so usually it's not very effective. For example, like in the case is Tongguan, for example, you see the volume is not very consistent, so it is not advisable to use. In fact, there's no technique we can use that is very good technique, or any technique you can use to trade the stock that is have a very low volume, or the volume is not consistent. So we need to have a stock that is have a consistent in volume, and also it is not controlled by certain parties. Only that you can trade, you can make money. Otherwise, you are at the mercy of the people who control the stock. They can push up and they can push down. So there is no technique that you can use. We can use basically for that kind of stocks.
I see. So what is the benchmark you look at to determine whether the trading volume is healthy or not? Like, is it above how many millions?
Okay, to determine whether there's a good trading volume or not, it depends on the stock. Some of the stock, they have the numbers is always high, but what you want to see is that the stock must have a consistent volume. Let's say, for example, the stock have we look at their trading average, so which means that every day they have a volume. For example, okay, look at Tongguan, for example. Tongguan, okay, we look at the volume. Here's the volume of Tongguan. Okay, as we can see, certain days, the volume is very small. You see, sometimes the volume is too small. For example, like here, the transaction is very small. So it is not easy for you to trade this kind of volume. You see, suddenly there is a big volume. Okay, there's volume. Okay, fine, there's volume, and then after that, straight away there's no volume. So it is it's a bit tough for you to trade. Some stock or instrument that is suddenly there's volume. The volume is very erratic, or which is up and down like that. So you have to choose a counter that is have a volume whereby volume is consistent, and then also you can see the spike of the volume. That is to determine to confirm the 1 to 3 pattern. But as I said earlier also, which means that the most important is the trading or the price action rather than the volume. The volume is we need the volume to confirm the movement.
Okay, are you able to look at Genetech? So these are questions by Feng Yi.
Okay, good. Genetech. No, this is hollow volumes, line volume. Okay, all right. Okay. This, yes, there is a 1 to 3 pattern here. You can see this is but this is going down. Is so it failed, or we can I would rather say instead of 1 to 3 pattern, this is what we call a double top, and it's a break the double top. There is a breakout here. You can see there's a breakout here. So based on this is a bearish pattern rather than bullish pattern. And also you can see that when it's a breakout here, there's a very big volume here, so it is a bearish pattern rather than bullish pattern.
Okay, so don't you call it a double top at the, do you call this double top in a very small time frame like this?
Yes, it can be double top in the it can be double top, because a double top, the most important is the neckline. This is neckline. It's a neckline, which means that it break the price goes up and it come down, and then it failed to break the previous high. It's a fail to verify. It's not necessary to be same level. Sometimes it's slightly lower, sometimes slightly lower, and then but to determine whether it is a double top is that when it break the previous low. So in this case, it's previous. So this is what we call a bearish pattern. So this bearish pattern, the successful rate is around about 70%.
Okay. So the next question is, can 1, 2, 3 pattern apply for stocks which are very speculative, such as Serba Dynamic?
Yes, also it can, but it depends on the time frame. Let's say for example, like this. Okay, we put it at the lower time frame, and then you can see here there's a 1, 2, 3 pattern. You can see that here, for example, 1, 2, 3 pattern here. This is the lowest from here. This one, this is 2, and this is 3, and we break out this level. Let me make it bigger, make it a bit higher. There. 1, 2, 3 pattern. This is 30 minutes. Because it's speculative stock, you need to have that's why I can say just now, see, that you can see that this 1 to 2 pattern in almost any time frame. Okay. So you have to change the time frame and look at it. That's why you have to be alert. You have to practice to look at the pattern. Because if you don't practice, it's hard for you to find the pattern. But you practice, then it's very easy, or very easy for you to identify the pattern. So it's very important that you have to study. That's why in the last, if you look at the last slide that I showed to you just now, is that use a paper trade first. So which means that you study 1, 2, 3 pattern and you make a paper trade first until that you have mastered it. Only then you go for the real trade. Because in any of the pattern technique, for example, whether you trade 1 to 3 pattern, or you need to trade this flag pennant, or triangle pattern, or head and shoulders, or the this cup and handle, all that, you need to practice. You need to practice to identify the pattern, and then you need to practice paper trade for you to trade. And once you have mastered it, only that you make a real trade. Because sometimes when we look at the chart, it is you try very hard to look at the pattern, and the pattern is not there also, that you think, oh, there is a pattern there. So sometimes we can make a mistake, or we can make what we call not a right decision. So we need to have another technique, or another indicator that to help us to determine the direction of the market and also the entry point. So I use this 1 to 2 pattern usually for the entry point. So it depends on what kind or what type of traders you are. Okay, let's say for example in this Serba Dynamic, as you can see, there is a 1 to 3 pattern in the downtrend. You can see that it's very clear. You can see there's a downtrend there. Downtrend 3 pattern. Daily, let's say daily, 1, 2 still not there, but you can see in the 4 hours, for example, there's a 4 hours. There is no 4 hours, 1 hour. Let's see 1 hour. Okay, the here it's a bit small. Okay. But they're still there, you see, in here, and then after that it dropped. Okay, the trigger point is here. There's a trigger point there. There's a trigger point. Make it smaller. Okay, there's a trigger point. So it's always there, the 1 to 3 pattern always show in the market.
Okay. All right, thanks for showing us all the case studies. And I believe that Tuan have already addressed many questions that you all have asked just now. Tuan, so do you have any concluding remarks?
Okay. in order for you to use the 1 to 2 pattern very effectively, the first thing you have to look is the trend. Look at the trend first, whether it is an uptrend or downtrend. So you want to trade, look at the uptrend. So we determine the trend first, whether it's an uptrend or downtrend, or you use uptrend. So make sure it's uptrend, and then use the 1 to 3 pattern for you entry. So which means when there's a 1 to 3 pattern, there's a breakout, there's your enter. There's a pattern, there's your re-entry, and the re-entry. And keep on riding till it downtrend, you see, and then only that you stop trading. Because basically in here or in the trading, it's not that how many stock that you trade, but it's most important is that you make money, even though just only a single stock, which means the single stock you just trade buy and sell. So look at or choose the counter that is a uptrend. Especially with this kind of market, it's much easier for you to look at which counter is the uptrend. As long as uptrend, you just keep on re-entry and re-entry. Thank you.
All right, thank you so much, Tuan, for sharing with us. Very simple technique yet powerful strategy that we can use to make money consistently in the market. So I think what is more important is for us to train our eyes so that we can recognize the pattern, so we can easily spot it through the stock charts. All right, thank you so much, Tuan.
Yes, thank you to all of you. Yes, thank you all of you, and I hope that, and I pray that all of you make money consistently in the stock market.